Hello everyone, my name is Andy. Today is Friday, September 15th. Time is around 11:15 GMT, and we will have a look at the NASDAQ futures on the Oanda platform. So in this analysis, I will combine the higher time frame and the week and the lower time frame. Yesterday, as expected, we had some a move up among the indices. For some indices, we took out some key levels, and so therefore it was good to already have a look at the higher time frame. And so I will do the same for the Nasdaq. So my take on the Nasdaq is that we had a wave one up here in the higher degree. We had 5 waves up. We end with divergence. This looks good. Then we had corrective move down as an ABC. So for now, I would call that the wave 2 low is in here, and that we are actually working now on a higher degree wave 3, like then this becomes the target. But yeah, this can take months and years to play out, so I think it's better just to focus here on this structure. And so if we are working on this wave 3 in the higher degree, it looks like we are doing a wave one here to the upside. So this would be the bullish scenario. It's also my primary scenario. However, there might also be a bearish scenario here in the weekly. And then I would call for a wave 2, which is not finished yet. As you can see, we did not reach the 0.5 FIB retracement. So what could happen is that, we are creating a flat structure here, like wave A down in 3, 1, 2, 3, wave A. Then this here is the wave B. We're getting quite close here to our all-time high. But what might happen is then 5 waves down as wave C, 1, 2, 3, 4, 5, deeper into this area. So this would be my bearish case, but I don't make this my primary one. The current price action is situated here, or low is for the moment here, or wave 2 low, so it makes more sense to assume a bullish scenario for now. However, if data starts to give indications, so if we start to drop, let's say, or if this becomes like quite a deep correction, we might have to start consider this bearish scenario. But for now, this is not at all the case. For now, I would say we are working here on a correction, so a pullback. If we look at the daily here, you can see the pullback. So I believe from this wave 2 low, we had a wave 1 up, a wave 2. Then here we have a wave 3. And so now we are working here on the wave 4. So like if the bearish variant would play out that I just discussed in the weekly, then this should be a wave B, and then this can actually be an ABC structure. Here, this is a nice extended, this could be a nice extended C wave. We clearly have 5 waves, 1, 2, 3, 4, 5. And then it would mean that, we never see the wave 5 anymore, but that we see more downside from here. Anyway, I am expecting more downside, but still as a wave 4. So as you can see, we are in the wave 4 area, or we went in the wave 4 area. This is the area that we can find by, if we take the length of our wave 3 here, then the wave 4 is supposed to go in the area between the 0.146 and the 0.618 FIB retracement. We went into this area and we also went up. So actually here, if we look at the 4 hour, it could be that our wave 4 correction is in here, because in my opinion we already had like a mature corrective move here as a WXY, but I'm expecting more downside because I see potential for more downside in the other indices. It looks like the correction in the DAX is not finished yet. Also, the correction in the Dow Jones is not finished yet. So therefore, I would expect also another corrective leg down as a wave 4, so that we should, at least take out this low here. However, there might be a case that, for instance, while the other indices, see downside, that the DAX, that the Nasdaq is just sitting a bit around here in this area. This could also happen, but we will only know this later. What's important about this correction is that if it happens as a double correction, so as a WXY, then this is a nice buying opportunity for investors. So then you have a nice pullback. So here would be an area to enter again. Then, if we look more into detail to this correction, then then we have to focus here on this part. So if we have a wave W down here, we have a wave X up here, and so actually here this was the first chance that our wave X was finished, because we had 3 waves up, 1, 2, 3, and this is also indicated in red. So there might be a chance that this high here is holding, and so then we would see a Y leg from here, and if this turns out, then we also know our target area, which is here the area in red. So if we take the length of the wave W, the length of the wave X, then here the area between the 1 and the 1.618 FIB extension is the area where the Y leg should end, and then this would also be the end of our wave 4. Now, there was a reason that I assumed, or that I take for my primary scenario, that the wave X was not in yet, but that we have here instead a double correction, like as a WXY. And the reason is that again, because of the other indices, it looked like the DAX did not finish its correction to the upside. Also, the FTSE not, and also the Dow Jones did not finish its correction to the upside. So therefore, I aligned the Nasdaq with the other indices, also expecting this double correction as a WXY. So now the situation is that actually the DAX might be ready to go down. Like everything is, we don't see it immediately at the lower time frame, but we are in the areas from where it could happen. The same for the FTSE, and the Dow Jones is quite close to take out this high here. So it could be that if the other indices reach a moment that they are ready to turn, that the Nasdaq does not take out this high here, but that we stick with the scenario in red as an A, B, C. So we have to see what exactly will happen. It can also be that we take it out. For now, I will still look for alignment with the other indices, and therefore I would call here also for the double correction WXY. And here we are actually in terms of swings, we are there, but we should go beyond this high to have the WXY correction. So let's have a closer look at this in the 1 hour. So as you can see, A, B, C up here. So we reacted from this area. So here the correction up could have been finished, but we went down here and we start to reverse. So I looked for alignment with the other indices, and therefore I assume also the double correction. Another motivation for the double correction is this structure here. So if you have a double, if you have a corrective move, if the corrective move is over, you should have an impulse down. And I don't really like to call this an impulse down. This looks more like three waves to me, an ABC pattern. We also do not have any divergence. So that was an additional reason for me to call for the double correction, because if you have three up here, you have three down here, then you should have again three up, and we should take out this high. However, if in some way this can be counted as a five waves, then of course my reasoning does not hold anymore. And so if this is five waves instead of three, then after five we should have three up, 1, 2, 3, which is currently the case. And then it would mean that we do not take out this high here. But if I analyze this structure, for me this looks more like three waves than five waves, especially because this looked like very strong down. It simply looks that the wave 4 and the wave 5 with divergence are missing here in this structure. So therefore I would expect somewhat upside, also taking out this high here. But this scenario comes under pressure if also the Dow Jones soon take out the high the FTSE and the DAX already did. They have complete, or they have almost complete upward structures, corrective structures up. So let's see if the Nasdaq is able to take this high out. If we take this high out, I would at least expect a reaction to the downside. We will also reach this area. Then here, if we take the length of order wave A, the length of order wave B, then here the area between the 1 and the 1.618 FIB extension is where we should go. And typically we also get reactions from this area. Okay, that's my analysis for today. If you enjoyed it, please like, subscribe, comment to support my work. And I see you back on Monday for an analysis of the lower time frame. Have a nice day. Bye-bye.